My name is Barrington Miller. I'm with the Canadian Securities Exchange, and my colleague.
My name is Maruf Raza. I'm with an accounting firm called MNP. We're a cannabis focused firm. We act for about half of the Canadian LPs and probably 90% of the US cannabis companies that have come to Canada. And we wanted to give you guys the story from Canada.
So we haven't really rehearsed anything. This is just supposed to be sort of an informal fireside chat on the go public process. From my point of view, the Canadian Securities Exchange has been around since 2003, got its recognition order in 2004, and we really came into prominence, I would say, in the last 4 or 5 years when we started accepting licensed producers and applicants in the cannabis space. And then after that, we started accepting U.S. companies operating in the jurisdiction as well.
So we figured we'd give you, the people of Michigan, like a brief history of what happened in Canada and really how it relates potentially to you. And so, Canada around circa 2014-15, we legalized medical cannabis. And Canada, unlike the US, doesn't have a thriving venture capital market, so we don't have the Silicon Valleys of the world. And so really, exchanges like the Canadian Stock Exchange play that role, albeit in a public setting, right? So it's really venture capital, but it's in a public setting. And so a lot of the cannabis companies that were kind of coming up in Canada and really pre-revenue at the time, most of that venture capital came via the CSC and the Canadian sort of ecosystem. And so, fast forward a couple of years, I think the Canadian story was playing itself out, obviously crazy valuations, lots of success from a market perspective. But when you started looking south of the border, the companies were far more advanced from an operational perspective. And so really about 18 months ago, the first wave of US companies started coming up to Canada, the ones that were sort of stuck here, they needed expansion capital. And I'm sure you've heard the stories of the MedMens and the GTIs and all the other companies that have had incredible success raising money and from a market cap perspective. And so really for us, that's where we see it. Obviously, as each state comes along, there's a tremendous opportunity from each of those states to potentially leverage Canada. And Canada has become, because of that risk capital, not just to the US, but also globally as well. We're seeing a lot of activity coming via Canada.
So in the go public process for our exchange, when we talk to companies in the US, it's usually they look at it as daunting and really, really expensive, and that's not the case at all. To list on our exchange, it's really quite simple. You need 150 shareholders. You need up to 200,000 Canadian dollars in working capital or enough to sustain your business for 1 year. You need up to 2 years audited financials, which this person can help you with. And you have to be in good standing and have a legitimate business. So there's two main ways of going public. There's the IPO process and the reverse takeover, or in the States, as you guys say, a reverse merger. What we've learned is that, and to support Maruf's point, a lot of the companies in the United States are mature. They have a history, an operating history, and they can actually do an IPO and list on our exchange. It's not that hard. And again, it's not that expensive. So.
Yeah, I mean, it's. I think that the go public process. I think the one thing, for our U.S. friends to understand is, the public companies in Canada are quite different than the public companies in the U.S. So when most people think of U.S. public companies, they're thinking of highly mature NASDAQ, New York Stock Exchange type companies, whereas in Canada, we certainly have those. But we also have a lot of startup type companies like that, we have public companies that are pre-revenue. And so one of the key aspects to take away, if it's something you're considering, is that, there's 4 major components of a go public, or people that you're that you need to know. So obviously the exchange being the primary one of importance, and right there is obviously the investment bank. And so Canada has that ecosystem where, that risk capital for cannabis companies is widely available from a retail perspective, from an institutional perspective, which is quite different from the US standpoint. In terms of getting it over the hurdle, obviously the two key pieces are the financial side, which is what we do as a firm, and the legal side, where you'll need sort of a securities lawyer. So within the four sort of key pieces, that's sort of your go public.
I'm just going to jump in really quick. If you are a small private company, the first thing is get your audits. Like Maruf said, the two most important are legal and audits. Start your audits. If you haven't, start it tomorrow. That's the longest part. That's the biggest hold up as far as listing is actually getting your audits done.
Yeah, I mean, I would take that as a great plug. I think for cannabis companies, it is particularly relevant because the financial side has been where there's been a few roadblocks. So when you look at your greatest challenges in going public, for cannabis companies, particularly cannabis companies that are in cultivation, there are some specific rules where you actually have to fair value your cannabis plants today and historically. So that obviously is not a simple exercise, which is, it's not a commodity, or it's not a commodity yet. It's, so you have to go and do a lot of work to prove to the regulators, to prove to the auditors that those numbers are accurate, because in the rules we use, and we use international accounting rules, not US accounting rules, the cannabis plants are carried at market value on your financial statements every period. So you can appreciate, if you're trying to do some historical statements, you will have some accounting type challenges. So I think that's what Barrington was referring to, is that it could be a roadblock. I mean, everybody gets there, but it's, if you don't start early, it could be a roadblock in terms of shopping your deal, getting out into the market. So we always try to start early from that perspective.
And from the exchange point of view, we let the accountants and the auditors do their thing while we do ours. In the whole go public process, we're near the end of the finish line. When all this begins. A very common question is, well, how long does it take? How long does it take to go public? I come in and I put my application in, I want to be public next week. Well, it doesn't quite work like that. If you're doing a reverse merger or a reverse takeover, that can take months, possibly even years, because you have to negotiate and find a company or companies. Deals tend to fall through at the last hour. Once you submit your application, and if you're doing an IPO, we are telling people it takes anywhere between 10 and 12 weeks from the time that we receive your $3,500 listing fee, $10,000 application fee, and $650 per month. That's the cost of going public on the Canadian Securities Exchange. And again, all figures are Canadian. So year one, you're looking at about just over 20,000 Canadian. Year two, your cost is $650 per month. That's it. So you're paying $7,800 to be fully recognized on a stock exchange. And again, the figures are Canadian. We do not take a fee for raising capital, whereas some of the other exchanges do. So if you're raising $500,000 or you're raising $50 million, all that money stays with you. And there are other exchanges out there who may not necessarily operate in the same manner.
Yeah, and talking about raising money, I think it's important to note that, obviously the big stories are the ones we hear, right? We hear the stories of, companies now, that in a year are at, multiple $1 billion of market cap, or have raised hundreds of millions of dollars in capital. And those are great stories, perfect. But what's also important to understand, there's a lot more companies that are raising $10 million and $15 million, which you don't necessarily always see from a US perspective. So particularly for companies that are getting off the ground, there is an avenue here. Obviously, if you have, rich friends, perfect. But if you don't have rich friends, there is an alternative for you from a Canadian perspective to raise that sort of Series B, Series C, 5, 10, $15 million from that perspective to really get going. And there's a lot of transactions that are happening that way.
While we're here in Michigan and talking with a lot of U.S. companies, what we do is we have a partnership with the OTC Markets Group. The OTC Markets is a trading and quotation service based out of New York. And the process for that is a private company from the US will become a reporting issuer in Canada and go public. They will then apply for an OTC trading symbol. All the symbols are designated with the letter F at the end to show that it's a foreign company, and you may be exempt from SEC filing. That way you now have exposure to the world's largest capital market system, and you're covering off North America with 2 trading symbols. That process, after you listed with the Canadian Securities Exchange, takes anywhere from 4 to 6 weeks, and it's a great way to reach your audience, especially when you have shareholders in the U.S.
So so there's still a tremendous appetite for U.S. deals coming into Canada. I think people are definitely being a little bit more selective. 18 months ago, everything was on the table. Now it's a little bit more selective, but the next wave for Canada is coming. So we're calling it Cannabis 2.0. And so the big thing in Canada is we've sort of had stages of legalization. So we had medical first, and then last year we had recreational, but it was recreational only for flower and oil. And so now, this October, we're now actually fully moving into the edibles market. So we think that this Cannabis 2.0 is going to create the next wave of companies that can now take advantage of sort of the market sentiment. And the great thing about the US companies is they are so far ahead from the branding and the actual cannabis IP that's going into edibles or the various processes. So there's a number of opportunities coming into Canada as standalone entities from a licensing deal perspective. And really for US companies, the interesting thing is that because of obviously the federal legislation here, you're very much handcuffed. Obviously at the federal borders, and even within the state borders, you're handcuffed. So some U.S. companies are actually now using Canada as a launching pad, right? So by bringing in or setting up the Canadian company, doing it, whether it's a Canadian public deal or a licensing deal, and then using Canada as a platform into the world, right? As each part of the globe legalizes, it's a tremendous opportunity. So without a doubt, U.S. in and of itself, biggest cannabis and ancillary market that there is. But when you look at the rest of the world, when you look at EU and Germany coming online, that access point into there via Canada is also quite relevant from a business perspective.
And we're seeing the same on our end as far as the listing applications that are coming in. The Canadian LP story has definitely quieted down. The US story is still red hot. Latin America, Colombia, Chile, Uruguay, Panama, those stories are really starting to emerge, as well as the European, Australian story. So this is not just a North American phenomenon, but we can be and have been your gateway, in a good way, to the markets. Now, I told my CEO that I'd be talking, and he sent me a bunch of tips to tell you guys. So pro tip number 1 is hire the auditor first. And then he showed MNP's logo, so that's their plug. Number 2, considerations for your share structure. Basically, when you're listing as a US company, you want to make sure they tend to split their shares to ensure that the majority of the holders are non-US residents, and that way you can keep your eligibility. Pro tip number 3, expect there to be a difference in the valuation. These Canadian companies were getting they're getting valuations, and a US company would come in saying, I'm 5 times, 10 times bigger, therefore my valuation should be 5 times, 10 times bigger than my peers in Canada. That's not necessarily the case, and we can talk offline why that is. Pro tip number 4, make life easier for US investors. Make sure you become DTC eligible so that your shares can actually be traded once you obtain a US symbol and quotation. We've already talked about the pros and cons versus RTO and IPO. And the pro tip number 6, make sure you meet the Canadian Securities Administration disclosure expectations. So just because we're in Canada, that doesn't necessarily mean we just follow everything that the US does, which we pretty much do. There's still requirements that we have of our own, and it's very, very important that you guys follow that. So that's pretty much our presentation. I think we fell in just under 30 seconds.
Perfect. So we welcome your questions. Obviously offline, I think
Yeah.
we're out of time.
We'll be here. So thank you.